A fib projection is essentially a fib extension where point 3 is on the same level as point 1. It can be a result of a situation where a base trend is fully reversed, and not technically a normal minor retracement from point 2 to point 3. However, the influence of the base trend is expected to continue as the chart continues back in the direction of the base trend after point 3. A fib projection can be made with a normal fib retracement that has the levels greater than 1 selected. It is literally the familiar fib retracement levels projected beyond the standard 0 to 1 range. As a result, there are only 2 points that define a regular fib retracement range, and the distance of a fib projection's base trend. A normal fib retracement can be drawn backwards to cover an established trend and have levels projected past the 1 fib level. This means in an uptrend, start at the price level of a downswing and drag point 2 down to the upswing that began the uptrend. In the case of an uptrend that has been fully reversed back down to its starting point, a normal fib retracement can start with point 1 at the downswing point that began the original downtrend, then drag point 2 down towards where an upswing reverses the chart back towards point 1, and is eventually expected to surpass point 1 to newer highs. In this case, the reference trend for the fib retracement and reference trend for the fib projection are the same distance of $10, but point 1 to point 2 is based on a downtrend portion. This means the direction of the trend doesn't matter that much compared to the distance the trend covers, in terms of the price range. In some cases, the fib retracement can cover a downtrend with point 2 much lower than the upswing that began the uptrend towards point 1. Like with the fib extension, additional levels can be added. The 1.272, 1.414, and 2 levels are among the most common levels selected. In the case of a downtrend that is expected to resume dropping much lower, the same ideas apply except in the reverse. A normal fib retracement can be drawn backwards to cover an existing downtrend's range. It starts at point 1 where an upswing has formed a retracement. Then point 2 is placed on the price level of a downswing that began the established downtrend that is expected to continue. In the case an established downtrend is reversed back up completely, the fib retracement can be drawn with point 1 at the upswing that reversed the established downtrend. Then point 2 is the point where the original established downtrend started, and where a more recent downswing is reversing back down towards point 1. Often, the original downswing and the second downswing won't be at the exact same level. Choose whichever downswing has the highest absolute high price. In some cases, a fib retracement may simply reference an uptrend instead of a downtrend, where point 2 is much higher than any other point, and is the site of a downswing that begins a large-scale downtrend. Just like before, additional levels can be added. 1.272, 1.414, and 2 are among the most common levels selected. Even though there is no point 3 to shift the fib projection lower, the levels can often cover a large distance. In fact, fib projections often cover larger price ranges because they can have a base trend that covers a longer distance, which will normally have a greater effect on the distance between the levels past the 1 level.